Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
Greetings, everyone. Welcome to Macro to Micro Options Power Hour. I'm Samantha LaDuc, founder of LaDucTrading.com, joined by Hans Albrecht, our options mentor extraordinaire. And we're coming to you to talk about, obviously, macro backdrop, but also how to play tactically actionable trades using options. It is also an Ask Us Anything type of format, so really we cover lots of assets and time frames. Just be specific with your time frame, since everyone basically defines it differently. And at the top of the hour, we have a theme of volatility reemerging because war is not exactly priced in, but I was literally working on my VIX indicator. I have some secret sauce intermarket analysis that I do for clients, and it still says July, August timeframe is when it bases before it moves higher. And it literally says July, August. And I've been talking about this, and literally April 22nd, when VIX reverted from 60 down to 29.56, it was a very key level. I said, okay, VIX is going to fade into options expiration and likely all the way through June OPEX. And not just monthly, but quarterly. And I think we're going to hit about 1550 area before VIX bases and starts to introduce some more risk. End of the summer, which happens to time with the tariffs coming back online of mid-July for rest of world and mid-August for China. So then today, we got a little surge here of volatility. I was literally working on this indicator that I want to show you in a minute, and posting my intermarket analysis for clients when we got news that the US was ordering evacuation from multiple Middle East embassies. So not sure if they're preparing for ordered departure as Reuters claims, or preparing to order departure as Washington Post claims, but either way, SPY dumped 1%, VIX spiked 6%, and crude oil also elevated 4%. Now, this is where we're at. Lucky or good, I had said to clients, be careful as we approach 6044 SPX, which is a monthly resistance level, because that's where I expect some digestion. And I've been updating this intermarket for a while. It doesn't mean we can't get above it. We're going to talk about that melt-up thesis that you laid out in the past few weeks, Hans, but we both in agreement that it's a melt up into melt down potential into Q3, Q4. And I can lay out that kind of macro bearish bent, but we have been tactically bullish. And I have also been tactically bullish crude in an inverse head and shoulder formation, tactically into about 70 on war vibes. Anyway, long story short, I am big picture still very short crude oil. I still think since last year, literally April, that we would fall into the 60 to 40 range. Everyone called me crazy, but now the $40 is not so unrealistic, especially if we were to pull forward recession risk, but mostly it's just falling global oil demand on transition into electric vehicles and the rest. Long story short, we did have some volatility at the end of the day, which, Hans, you may not have seen. We did. And now we're going to talk about whatever is on your mind, but for the most part, I still think that this might be a little bit too early for volatility to really be sustainable. I'm still looking for end of June grind sideways to higher before we roll over. Your thoughts?
I think you're right, Samantha. I think we're probably still okay. We see the VIX term structure in a very healthy, happy contango, which sounds like a dance. It just means the shape of the term structure is in a sort of upward sloping shape, and that means that people generally aren't very nervous underneath the surface, at least that from the smart money perspective. And that is certainly confirming a move to 6,000. We talked about that over the last couple of weeks. Last week, I said, I think likely scenario is we grind up into that 6,000, that 600 level on SPY. And that's what we're doing. We overshot a little bit. And as you say, we had a little bit of news there that there's still always that opportunity for the little knee-jerk reaction to the downside. They seem to be just hoovering up these sell-offs quite easily. And so it would probably continue to see something like that until we get bigger news that could maybe act as a kind of influence, a big enough influence to get things going to the downside. It really has been a story of MAG bringing us back, a lot of AI, a lot of the semiconductor index. So I've been shouting about the SOXX and even the SOXL, which I tend to not do very much. So we have some trades doing very well in the SOXL. And I think there are trades that you can hold. We are a little bit extended at this point in some of those areas, but I think there are even some interesting names within that group, like a Qualcomm, that I think as people figure out where this next phase is going, how this kind of inference phase, whatever you want to call it, the inference, the the insight phase, right? The phase where everybody kind of starts using stuff, which is very power hungry, by the way, which by some measures 20 times that inference phase. It thinks about it, it fixes things. There's so much more that goes into that from a computational standpoint that it really brings into view so many different interesting companies that can do well. And so I'll show you guys some interesting things in a moment, but we've really shifted we've gone from lower beta into kind of a lot more higher beta lately. And I'm sure, Samantha, you're talking a lot about that. We're starting to see more the beginnings of parabolas, some actual parabolas into the sort of silly season kind of stocks where even the Cathy Wood stuff is starting to get going again. And some of these kind of moonshotty type plays are starting to get going again. And I think that is to be respected. I think that's something you trade and maybe don't sit on for a very long time. But I think it is something to be respected because it's a very interesting market. We've seen this sector break out, this kind of moonshotty sector. Now, is that a sign of the end? Because the mags, some people say, once you start buying the sort of junkier stuff, then maybe you're near the end of a run. Could very well be. Maybe we're in for a little bit of digestion at this point. However, I would say that it is in keeping with my sort of views that I think this could be a little .com-ish at some point as people get excited again about these sort of little stocks and super high beta kinds of areas of technology. So remains to be seen. Right now, semiconductors still looking really good. NVIDIA, interestingly, hasn't really been participating this week, but that's an interesting thing to notice. So a little bit more broadening out. I'm not just saying it's those little things, those little crazy stocks. We have seen a broadening out, and I'll show you guys a little bit of that in a moment. So I think it's very interesting. One thing that's got me scratching my head a little bit is the IWM. We always talk about it, and you hate it.
We
And
do.
I haven't liked it, and I really didn't see this coming. We've pushed up, and I don't know. I can't quite figure out. We should discuss this right here, right now. I can't quite figure out if this is looking towards the horizon where there is the possibility of rates coming down. I think labor is weaker than people say. If you're looking at inflation, I think you're looking in the wrong places. And I know that's really a focus for everyone because of tariffs and deglobalization and all that stuff. But I think labor is going to be a focus number one at some point, as we will see. That is going to emerge as a big problem, partially because of AI. So you have these sort of conflicting things happening at some point. And IWM has broken out. I did not see that happening. But it's not being really confirmed by rates quite as much, right? So if they're thinking we're looking to the horizon where things are starting to get better again, we're not really seeing that confirmation. Maybe TLTs may be a little bit of a different animal, a little bit, but I think that's interesting to me. That's happening now. Maybe we could chalk it up to just massive shorting. There's no question. We've been talking about this for a month.
So
Everyone
this is
is
actually, I was
wrong-sided.
looking for that particular stat. There are two reasons in my estimation for why small caps are moving off the bottom, along with the diamonds. Not quite, actually, they are tracking really well together, where NASDAQ and SPY, which are heavily weighted with Mag 7, are obviously already near all-time highs. I'm looking for that stat because it's basically one of the top short covering rallies, this hedge fund factor rotation, which is basically they're just beating into the ground the poor constituents that are already hurting unprofitable, not tech, just unprofitable and or suffering small caps from the weight of higher rates and such. And they then cover, and we've had this resumption off the bottom that actually is record making. That's number one. So small caps, that component of 2,000 constituents, 43% is unprofitable, have nonetheless come up from the bottom, and that has helped the breadth expansion. The second thing is breadth expansion. So I can show you my intermarket that I show clients, which is from December 2nd. We dumped underneath the surface. NYSE and the rest of the market didn't participate in falling until we had that air pocket of risk back in February. And then we really collapsed into April before the Trump policy intervention on the 9th. But the point is that breadth destruction was serious, and it has climbed back up. This kind of has rounded out as far as the advance because fiscal spending is all gas, no brakes. And fiscal spending that is expected from this reconciliation bill that's right now passed House into Senate is something that lifts all boats, right? The tide that lifts all boats and liquidity and all of that. So I think you have the combination from grossly oversold levels in small caps relative to SPY. They were at 2018 levels. I mentioned that, which is honestly a great technical bounce area. You also have breadth that was exceedingly oversold that's making its way way back up and has not reached, by the way, prior highs anywhere near December, let alone February. And I also highlight SPY. The percentage of stocks that are above their 200-day moving average in SPY is at 52%. You'd think it's much, much higher. And actually,
Yeah,
I'm
you would.
really bullish when that level gets above 65%. So my intermarket, all this breadth that I do, this net buying, net selling, liquidity, stock bond ratios, all of that, rate differentials, currency tells are really important to say, okay, we have done a great job in this V shape, all gas, no brakes, fiscal spending expected. The Taco Man has delivered in most part by softening these high tariffs. Instead of 145% on China, it's going to be 55%, right? That came out today, which is really a 30% increase on the already 25%, et cetera, et cetera. So the market loves to be lied to. It loves to climb the wall of worry, and it has a lot of mechanical buyers still attached. You sent over some notes that I'm sure you'll highlight when you show your screen. You've got, oh my goodness, leveraged ETF, rebalancing flow continues higher. The equities of all control funds are also mechanical buyers, 68 billion next month. We do have a stay. June 16th is when corporate buybacks end. But until then, right, make hay, the sun shines. And then you've got all this dealer mechanical buying because of deltas. So you profile that really well. So does Jason in our Slack channel for members of Volland. And I'm just connecting the dots of, okay, we've got the macro backdrop of fiscal spend, all gas, no brakes. We've got the quant, absolutely flows are mechanically strong, and it's seasonally also very strong. When has NASDAQ ever fallen in June, right? Into that, this is typically a really strong time. So I think small caps are going along for the ride from a very strong oversold bounce, long story short. But you're right, Mag 7 is still in the driver's seat. In fact, Oracle just announced after hours and they're pushing 190, and they're part of this AI ecosystem as well. So this is still where folks are rotating and expecting a lot of forward growth to get pulled into this earnings Q1, Q2. We'll see what happens in Q3, Q4. I'm obviously much more bearish and skeptical, but around jobless claims increasing and earnings multiples contracting. But for right now, they got that delay from Trump back in early April. So they have basically a pass for Q1 and Q2, and they're continuing to beat.
Yeah, and it really is reaching for the right stories, the stories that are working throughout Mag 7 for a bit, and then they outperformed versus consensus. They outperformed. The numbers were good, and I think people just keep returning to the same thing. This is nothing new. We go into every year, everyone's underestimating what technology is going to do, and then it ends up doing better. It's been happening for 15 years, or at least 10. It's been happening for at least 10 years. It is always really the place where things continue to improve. And the storylines from the AI perspective is, you're right, they're starting to move into some of these names thinking that, and I believe in this, that AI, in a sense, whether you consider it software or the hardware, it's almost not really a cyclical thing anymore, right? It's becoming, in my view, I feel like it's becoming like a need to have, not a nice to have, right? And so I think it's going to be like running water. It's going to be like electricity. And you see a country, I think it was UAE, that said, we're going to pay for AI for everybody. I think that is incredibly smart. That is somebody saying, listen, this is going to be in some way, we don't know how much, but it's going to be an improvement to people's productivity, to what they can accomplish. And we want to make our people smarter. And I think you should really pay attention to that headline. It is going to be something that really helps a lot of people accomplish more. Again, what that means down the line for folks, I'm not exactly sure, jobs, et cetera. But we keep reaching for those very strong narratives. So let me flip this over here. And I think you're right. I think people are going to look around, and like they're going to look around. I think Qualcomm, for example, was under love. Now I think it gets a little bit of love because I think they've seen AI a certain way, and now they need to shift their focus into this inference phase that is more broad based. And it brings into view some interesting little plays. Like I think the Palantirs, the Snowflakes, I'm not saying those are under the radar, but there's certain companies that are going to be in the right place at the right time, right? They absolutely, look, NVIDIA was in the right place at the right time. They made GPUs for video game playing. They never had aspirations like this. And suddenly what they do is it lends itself to all areas of AI. It really worked out. And so there are companies like Snowflake, I think they have all kinds of hundreds of companies that pay them $1 million a year to sort their data, organize their data. Can you imagine how many CEOs are going to be going, holy mackerel, I just heard about so-and-so. They've got Snowflake. They're doing this. They're doing that. They're improving this. You get on this right now. Put together a team and figure this stuff out. It is going to be a fever. It is going to be a frenzy, whether it yields. I know all the naysayers are going to come out and go, oh, it doesn't yield anything. Oh, it's a big fancy chatbot. Doesn't matter. The picks and shovels makers will do great. These kinds of companies will do great if that fever increases. So let me, oh, you're showing the cash flow.
Yes, I am, just because you are very focused on this, so I'm doing it for you. Basically, the Mag 7 brought in a combined free cash flow of 407 billion in 2024, up from 218 billion in 2020. So you can see the trend is very much higher. However, you know me, I'm always going to bull bear.
Love it.
Lawyer of the trade. Got to look at the bullish, got to look at the bearish. This is the exception, not the norm. You really have to focus on this is the stock market. This is not the economy. So 68% of US big tech's current equity valuations are based on future earnings growth, i.e. Mag 7. What you're seeing right here is the balance sheet heroes that you talk about oftentimes. Just 34%, however, for the remaining 493. So that implies, again, that the lion's share is going to most definitely be this earnings expansion by the heavy hitters. So that moat is still very large. And this is the reason why we have a lot of economic value going to big tech, but not corporate America more generally. So, and that data point, by the way, came from DataTrek. This is, again, the market, not the economy. We still have to talk about the uncertainty around tariffs and lack of trade deals, lack of tax deals, lack of peace deals, and that uncertainty still is the backdrop against which CEOs surveyed 83% expect a recession. So again, that's a sentiment survey. Fundamentals will reprice the market when they come in. And right now with stable non-farm payrolls and CPI, even if it's new methodology and BLS is BS, it's still, the market loves to be lied to. Just like the Trump tariffs this morning of saying, we've got 55% on China and they've only got 10% on us. People seem relieved because it's not 145%. But this will have a backlash later as margins do get compressed and prices rise, higher yields, jobless claims, all that stuff is an end of year problem, not now.
Yes, I have to admit there is an element of reality, and it almost feels like a bit of a game of chicken at some point, this whole AI thing. And I know I could extol the virtues of it, and it concerns me as well. But I think, look, I think there is going to be reality, and it's not to say that it doesn't. Even if AI becomes a must-have, it doesn't mean that Snowflake should trade at $300 and it can't go down to $100. If 100%, the markets are going to do what markets do, and high beta will react accordingly. So this is not going to be immune, even if the story is strong. So there are definitely things that are going to weigh. I think that labor thing is going to be a big problem at some point. So, do we start to see signs of that this summer, maybe in the fall? Does that coincide with when things start to really ramp up in this theme that I'm talking about? But for now, we can see people are just crushing options into the 6,000 level. They're thinking what we were thinking last week, which is we're probably not going to get too far past that. Let's absolutely hammer the upside. And so very interesting charts that I'm going to show you in a moment. Oh, so here it is. We can see they've really gone from sort of small cap into the large cap for most of the run. And then over the past little while, they're going into those smaller names and those higher beta names, as I'll show you right here. I think you've probably seen some of these, Samantha. This is always great stuff from McGillicuddy. And so here we are, highest beta. We've gone into lowest beta. And then here we are moving into high beta again. And let's take a look. Momentum as well, similar sort of thing. This is one thing. I like this chart. You probably aren't going to see this chart too much, but this is one of Hans's crazy things here versus the XLK. So this is from my mad scientist lab. I'm comparing ARC to the XLK, which is a lot of kind of NVIDIA and Microsoft. So basically MAG and big names like that. I might as well have put MAGs in there. And so for me, I always like to look for a spot. I know you do this too, Samantha. You got to zoom out a little and go, okay, we're in the midst of something crazy and we're seeing these stocks do stupid things and crazy things. How far can it last? So I just like to have a bit of a signpost ahead for myself. So you can see this relationship between the silly stocks. And I mean, there's Tesla in there too, right? So it has a big mag in it. But
it also has a lot of Bitcoin in it. I'm just looking now. The ARK Innovation ETF has big weighting. Yes, Amazon and Meta, but especially Tesla, Palantir, Coin, Hood, and then also AMD and Shopify, Roblox,
Yeah.
the top
Yeah, a
10.
little biotech as well. So it's got a little bit of other interesting stuff. I think it's missing some interesting things as well. I don't think it's a great
So
overall
how do you
portfolio.
use this? Because I don't like ARK, obviously. This
I'm just using it as a way to go, okay, and I could probably use other things I should probably compare a couple of other things, but I kind of want to see the silly money versus kind of the steady Eddie money
makes sense.
of MAG, which is really that's helping to keep VIX down. When under the surface, you can have movement, you can have dispersion, which means things are going in different directions and people are jockeying for position. But when Microsoft just does nothing but go up and Nvidia is stable and Amazon's relatively stable, so that's going to bring down your VIX. But you can see here as we broke these tops here, and this is your extended silly move, right? The silly money move is here. So if I were to look at this, unless something bad happens, right? War breaks out, something bad happens, which is always a possibility. Maybe we get just a little bit more of a move up. So for me, I have a position in ARK, believe it or not, and I have some a little bit more speculative positions. I'd be looking to maybe start trimming maybe right around here and here, right up into this top, and then look for a little bit of a reversion and definitely look for things to reload. Corporate buybacks, really big. So making the point that when there's uncertainty out there, what do you do? You just buy back your stock. Great. We're going to buy back a whole bunch of stock. And that's what some companies like Apple are very good at, which is buying back stock. Now, this is very interesting. We've been talking about how this right tail always gets ignored when everybody's focusing on the left tail. And here we are. I feel like a broken record everywhere I go. I'm talking about this melt up and right tail stuff. At this point, it may not even be done. I don't know what's going to get us going again, but you can see this. Basically, this is showing positioning. So people are selling market makers a whole bunch of puts, right? So the market makers, when they load up on puts or calls, in this case, it's puts below where we are, around where we are. If they keep buying those puts, then that creates stability in market, right? Because they buy future stock against puts. And so there's this positive cradle of gamma that we talk about sometimes. And if you look to the upside, people have missed, because of all the things that we've shown weeks ago, which basically nobody was playing the upside, just super cheap upside calls. Now they've reconsidered, they're trying to buy convexity. So what a lot of people are actually doing is they're coming in and going, you know what, there's the overall option pricing is cheap. So what can we do? Well, we can do stock replacement, right? So instead of owning Nvidia, well, I can get rid of my Nvidia and I can put on a position with calls because they're cheap. Maybe I can go higher delta to make sure I'm getting enough of a move to the upside when things go up. And so you've got this sort of negative gamma to the upside. So I hate to say it, bears, but if for some reason we start rolling hard to the upside, you're going to have this negative melt up potential out there, the melt up into the meltdown at some point. But we don't know how long this melt up's going to be. You're saying end of June, Samantha. Maybe it goes a little longer. We got our caller.
I can only show you what I have, and it's worked, and I have to be just on it. But because I'm also getting a question about liquidity,
Okay.
show the rest of your chart, then I'll show mine.
Oh, yeah. So here, this is just another way to show that skew, right? This is where everything was, end of the world, let's pile into puts. And now everything's rejigging a little bit, normalizing, right? Normalizing because people missed the upside. So this is basically showing that now it's coming back into a little bit more balance of calls coming up and puts coming down a little bit as they keep hammering those downside puts. So that's the backdrop from a flows perspective, from a gamma perspective. Oh, where was that little chart? Oh, I don't even have it on here. Oh, that's too bad. I had a chart of the ETFs. So this is the levered A growth. You mentioned it at the beginning, at the top of the show. And if we look at, this is where those levered ETMs, so we've explained the math behind this. And of course, as MAG, especially because that's where a lot of these leverage products exist. That's where they live in MAG a lot, at least half of it or 2/3 of it. So in those names, when they have good runs, it creates more of a good run. Buying begets buying, just like selling begets selling on the way down. And so here we saw A really get crushed into the sell-off, and it's back on again. People are back on the train again, A in these products, zooming up. I was looking at SOXL the other day. It was interesting, Samantha. I looked at, because I was doing like I have a little kind of crazy theory that it's not crazy. Those things will do well when there's not as much underlying movement. So once you hit a good trend, it can really go. We talked about that last time. There is as much A, last I checked, in SOXL as there is in the SOXX, which the SOXL is based on. There's the same amount of A. So you can bet people don't just want to go fast, they want to go as fast as they can in these kind of sectors. And I think that's always fascinating. Okay, back to you.
All right, where to start? Let's just do this one. So you can see this VIX, it's on a weekly. You were just talking about when does it get interesting again? Okay, so this is my own proprietary thing, right? So I have on a weekly, you can see where it does not trigger very often. So down below these dates, I have an indicator, long story short. And when it triggers, it just means pay attention. That's all it means. It means pay attention. It could get bumpy, okay? Now I've got it on a weekly. Why? Because we don't get so much volatility. And always I'm looking for policy interference or policy intervention as a reason for the season of macro backdrop to support bullish flows. And then I'm looking always for a macro event risk to interrupt the bullish option flows. So that's always how my kind of guardrails work as far as when to stay in the trend and when to be careful that the trend is going to change. And I've been saying since April 22nd, in fact, when gold topped and VIX came back inside 29.56, I said, this is where I see VIX falling, that realized volatility, falling into options expiration on the monthly. And then I did it again for May, and then I did it again for June, meaning we're going to keep going lower in VIX, which is naturally supportive of markets, right, into June. I think June, end of June is probably it, because my indicator is not green yet, right? It hasn't triggered, but I see that it's going to trigger in this neck of the woods, which basically is July, middle of July, maybe into beginning of August. It's also not a game of perfect, but it's absolutely when I start to pay attention. So long story short, this is my indicator has not triggered yet, and why I keep saying I see it triggering in July and August. What will it be? Will it be tariffs? Will it be the debt ceiling not getting raised, like Besant was out today saying, by the way, if we don't get the debt ceiling raised, we will revisit 2008, 2000, literally great financial crisis lows, not lows, crisis. He didn't say the lows. So Besant is out trying to push, right, the legislators to push through the tax cuts and all of this fiscal deficit increase and spending that's going to go with it that the market is already pricing in. And they're also bludgeoning Powell to cut rates sooner rather than later, pointing to CPI coming back down. But might I just add, CPI coming back down is a little bit fishy, meaning this is a new methodology that they're using in order to estimate CPI. That's a new one on me. That was just shared with me today. So it's really tough to trade big picture in BLS, for example, unemployment and or jobless claims until they start to trend higher. Then it's very easy because then recession risk is going to be pulled forward as jobless claims start to trend higher. And that's been my baseline bet. We're going to get and stay above 267,000 in about Q3 of 2025. Recession risk gets pulled forward. Only reason why recession risk got pulled forward in Q1 was because of Trump's tariffs, the way that they were rolled out. It was just like a hammer on your thumb, and markets freaked out and money went home, also because of executive orders that Trump wants money to go, China in particular, investments to divest and go home, and then the threat of taxing foreign holdings, which is again more incentive not to hold US assets, and yields were rising abroad, and so they were chasing it. But then the market did a V-shape, right? As soon as he said, we're going to delay tariffs, and then he got deemed the taco man, and the rest is history. But the point is, this is a bunch of stuff that I'm sizing up that says, all right, there's a lot of noise here, but the signal to me is pretty clear. I'm waiting for July, August. I have been talking about this for weeks and weeks. Market has moved higher into near all-time highs. Small caps went along for the ride to about 50%. We're still looking for the next shoe to drop. I am trying to stick to what I still have, which is even my most recent intermarket post, which is it was part one, we're bouncing. Part two, we're bouncing. Part three, it just every single week I kept updating and going, we're still bouncing into resistance. I finally posted it today. We bounced into resistance. So now this is the time we need to take care for the next month, because it could still be 100, 200 points higher in that kind of melt up scenario, but it's going to be harder to do without really solid reasons. We've already risen on sentiment, typically we will start to fall on fundamentals. And I think the fundamentals will start to appear toward the end of the summer. And that's even separate from what's going on with the mini VIX spike at the end of the day. And also as a reminder, we have not had a down day. We've only had a single negative 1% day for the SPY in 7 weeks. So talk about mechanical buying. And then I have another chart, last one, which is, again, this is not a timing tool. I can do that in my trading room, but as it relates to big picture, when we're talking macro and setting up for when the next risk occurs where shorts want to get a little bit more prepared, this is put call ratio. And it basically, again, is just a reminder, right, that you've got some areas where I'm not going to be able to highlight this, but this was July into November before the 2022 fall. And this was also back in the yen carry trade unwind. And this is now. So it's just getting to that point where we have a lot of scenarios right now pricing in a melt up with a Nomura saying, hey, we got vol control funds buying, we got buybacks, we got Fed, all gas, no brakes, et cetera, et cetera. But we really don't need much in bad news this summer to push it back over. So this is a better.
That's true.
That's out.
And if it exactly. The illiquidity of summer, and if people start putting the juniors in charge, and that definitely there's a possibility of that. But you're right. There's no sense in fighting it at the moment. I think people get in trouble just fighting, selling, or getting bearish just because something's going up. But I like your method of waiting for things to get to a certain point and wait for things to roll over a little bit.
Yeah, not in a hurry. I have not, and on the liquidity front, this is something that I show every morning with clients, but we're not there yet. I have the E-mini 6127 as a price target. So SPX might have hit 6,044 today, which is a monthly level where I see digestion. Doesn't mean we're not going to push ahead. And I still have in my liquidity tell 6127 for E-mini that looks very probable before we also start to roll over. So I'm on liquidity front. We've got nothing underneath the surface that indicates selling other than a little bit today because of the war vibes, right, that triggered toward the end of the day. But other than that, we have not had any selling of size underneath the surface. And I do mean breadth is still languishing, meaning SPY percent of stocks above 200 day, but it doesn't matter. Look at the price action. I've got tons of divergences that I shared with clients today in the intermarket tells, credit spreads among them, resistance levels that have tagged across the board, head and shoulders formations everywhere. And this short-term bounce in crude also expected, but then I expect it once it peters out, it'll roll back over and head back lower. So there hasn't been, first of all, I'm not surprised that VIX has fallen and that markets have levitated higher. What I'm looking for now is when we're going to get some macro triggers that will start to unwind this wind.
Yep.
And if I don't see them, I'll also know if we get and stay above certain levels, I'm wrong.
Yeah, it's been like last week we said hurry up and wait. And it's just been a little bit more of that. I look at the term structure, which means where are options priced over time, now, later, next week, a month from now, et cetera. And it's very tame. There really isn't much being priced in. I'm looking at certain events and they're really not pricing in big differences there. So there's really this expectation. I think at some point we get maybe a little bit too complacent on the vol side of things and probably we'll set ourselves up for a little bit of a sell-off. But for now, I think you maintain that grind. There's some meat left on the bone. So from a harvesting standpoint, when you're an option seller, whether it's calls, puts, whatever it is, playing the VIX products, there's maybe a little bit of meat on the bone. It tends to be that kind of slower money. It's the slower money. The big Vega money happens, and then it's just being patient. And so this is the hard part. When you saw the volatility we saw 6 weeks ago, it's hard to be patient, or whatever it was now, 2 months ago almost. It's hard to be patient. And that's just how you have to be. You've got to be patient, wait for the signs, and play the things that are making sense, like nuclear, right? Trump's all over nuclear. And so Oklo, somebody was mentioning in the chat, Oklo did an issue. What a surprise. The thing went bananas to the upside. Now they're going to do an issue.
That's usual. Yep.
SMR, what's the other one? SMR.
But these are, like, for example, we talked about ASTS last time. This was recommended as a new trend play of mine back in February. Did I expect that it would have 10.6% short covering and get included in the S&P 1000 and also have lots of approach by the powers that be over potential M&A? No, but it's up 50% in 5 days. And you actually talked about this exact one last week because we got a question, what about ASTS? It's starting to look good. And I'm like, for me, this is a long-term play, which is why I really did a lot of fundamental research on this this one. And it happened also to time with the Musk-Trump war, because I
Yeah.
deeped my anti-Musk trade just because it's satellites. And of course, you've got
Right.
SpaceX versus ASTS. But you nailed it with the poor man's covered call theory. Just let it go. I have a
Just
financed
let it
call
go.
spread.
Yeah.
So mine is selling the 20 to finance a 30 by 50 out in January 26 and January 27. So mine are also a bull risk reversal. So we're talking time, 18 months
Yeah.
out. And they're already up from scratch to $3.65 from a nickel. So it's one of those deals where catch it while you can. But did I expect that in February? No, I just, in time, it's going to work. If it doesn't, I'll know that too.
Yeah, if this becomes a little bit of a moonshot watching market, then these kinds of things can happen. But that was a bit weird how we talked about this last week. And I credit my student for this because he brought it to me and he said, "Oh, I've got this position on that I saw in a group, in a trading group." And I said, "Oh man, that can get you in a heck of a lot of trouble." And that's exactly what happened. I said that the way that he had the poor man's covered call structured, he would have really gotten hurt on this unless he was very reactive, which I think strategies that require retail to be very reactive are really not the kinds of approaches that you really should be pushing, right? I think there's groups out there, memberships out there that are pushing these kinds of ratio strategies on the downside S&P. Well, they get killed in August or recently. They get destroyed because you're making the assumption, you're saying, yeah, this is great until things get ugly, and then you have to react to that. You've got to be very proactive. That's hard enough to do for a pro. Trust me, a pro's going, wow, we're down 300 points. I'm not going to panic now. And then it gets worse, and then it gets worse, and it gets worse. But you don't want to push those kinds of things to people who probably are working 9 to 5 to begin with and don't even have the ability to react to something like that. So of course, this was a perfect example. It was weird how this worked out, but this would not have been a good situation for that trade. Now,
Question. Okay, go ahead. Finish that. Then I
go
have a
ahead.
question on
No,
this.
that's it. That's it. Yeah,
Okay,
go ahead.
so I was sent because I've been on this for a few months, right? Before it became very popular, and it has nothing to do with nuclear. Really, the whole satellite space drone theme is in addition to the nuclear and renaissance and power producers. But today a member sent to me that there is potential M&A talk. One of the big ones, right? Amazon, Apple, potentially as a M&A buyout. And in that case, sometimes those option structures can be dangerous in a buyout. So any advice on that when a stock gets taken out and how to protect against that? Because there is some instability, if you will, in options when
There is. Look, options have time value on them, right? So if you buy something with a heck of a lot of time value on it and it gets taken out, guess what gets taken out? The time value at a certain point. Usually a takeout is going to involve a few months before the close. But once the news is out, basically volatility comes right out of, the premium comes right out of the option. So that always is a risk. So for example, if you were to look at ASTS and say, I want to buy, it all depends on the takeout price, right? If I buy the March 2026 40 calls at $10 and they get taken out at $40, I'm going to lose all my money. But if they get taken out at $70, then I'm going to be just fine. So I don't know if I don't know what they're referring to. It could be any kind of strategy, but just as an example, that is one of the risks, is that if you
it
have
is a
too
huge
much
risk, actually. It's why I'm bringing it up, because
for
I
sure.
don't think it's a high probability that he's going to go now. It's way too much runway for him, the CEO. But that's my opinion. I could be completely wrong. He could name his price. He's got a lot of serious interest, and therefore it brings up the point, if you're using option tactics and all of a sudden, because remember, they're pre-profitable. So maybe he takes the money. But the point is, structure your options carefully in the case of an M&A buyout, because some can go and become donut, but not to your favor, is all I'm trying to say. I don't think they will. I don't think they will sell, but it sounds like they've got some very serious interest.
Yeah, if you're buying something, some way out of the money calls, hoping for sort of a nice run, that's what gets in your way, right? M&A will get in your way because you might have been right. You might have had a stock, maybe this thing goes to $150, and you would have been absolutely right to buy these 50 calls for $7. But if a takeover happens, then that's off the table. This is not going to be listed anymore. So there's always that risk. What's happened, I remember it used to happen when I was a market maker, it happened a lot in mining stocks, right? In mining, something gets taken over and that sort of thing happens. So it can happen for sure. I don't remember ever really being stung by anything like that, but it
All
can
right.
happen. There's no question.
Let me,
Yep.
since you just mentioned mining stocks, and I want to
Okay.
answer some questions in here because we got a bunch of them. I was interviewed yesterday by Jason Burback of Main Street for Wall Street, and it's a great podcast. I was there last June, December, and again this June. So every 6 months. And basically, I made my call about crude oil falling into the end of this year, and I also made a recession call for end of this year. So he's kind of like revisiting that. Anyway, he's a mining expert. Oh my goodness. So we ended up talking a whole hour outside of the podcast just about the gold, silver, palladium, copper trends. And I have a lot of clients that are really deep into commodities as trading vehicles or as their expertise. And so we talk a lot, we exchange a lot. Interview him next Thursday at 4 o'clock. It's June 19th day. The market is actually closed, but he's still not available until 4. We'll do a podcast, and I want to get members to submit questions. And I'm talking, he knows, oh my goodness, he's been in this space for 20 years and deep fundamental knowledge of the mining industry. We have, I'm talking gold, silver, plate, you name it, uranium. So commodities galore. Hit me up with questions and I will pose them next Thursday in case you can't be there, because I know a lot of clients are also in Europe. On the nuclear side, I have to review a few things also, and then we'll get into questions. This is one that I think we talked about here. I'm not sure, but I know we've talked about more than Oklo, okay? Fluor, F-L-O-U-R, Fluor, is a very diversified company that I actually recommended as a trend long with uranium. It's got energy, blah, 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 blah. But with uranium back in this November of 2020 with CCJ and URA, and basically it is your boomer stock. It is not a momentum play. Nobody cares about this guy. But it came down to the 400 week. Clients know I'm crazy about the 400 week. Unless you think the company's going out of business, it usually pops back up. And it has an investment in SMR. So think of Fluor as the boomer stock and SMR as your youngin here, your millennial. I don't know what you want to call it. Anyway, SMR is also part of this nuclear AI data system build out. And these trend lines have been great of late across the board for a lot of commodity plays, including the ones tied to data centers, including FLR is on its way to tag that 50.5. We also had uranium was coming up off the bottom. So these have been like in play, but they also apply to semis. And you were talking earlier about semis. And we talked, obviously, Dell has been in this downtrend. There's your 400 week into the trend line. And then it scooped lower and it's trying to get above. Dell is doing very much the same thing. I love this as well. I could go on and on. And then recent ones that I added, NXPI still on its way, and STM and on. Anyway, these are oversold bounces that are coming up that still haven't gone into fire flames mode, but they are recovering beautifully. And it doesn't, I think, also mean that just because we've had a really outsized move and NVIDIA is the golden child, poster child, however you want to put it, you've got a lot of other semi plays that are coming up off the bottom. And STM was recommended last week with ON, with NXPI, and these are slow to come up here, but they're still working. So this is a technical way of looking at a 400 week, also a trend line, but I have been identifying tons of these types of plays, and I will add that all of them worked. All of them worked. And then Fluor was just the most recent one that nobody was paying attention to. And I said, this is so undervalued in my opinion. And then today we just happened to have an 11% up day, but it's, like I said, it's got a little piece of SMR. It's had a little piece of SMR for a few years now. So I got into this years ago because of this nuclear theme. And now everybody's focused on this guy and ignoring grandpa. So anyway, boring but profitable, long story short.
Love that theme. We're not going to have enough power.
No,
We're not going to have enough power. That's right. And I love to see hyperscalers associating themselves, aligning themselves with nuclear. Trump's very positive about it. So I think it's an interesting play. Valuation, who the heck knows? But it's, yeah, not boring, William says. Definitely very interesting. But I think something that really has some runway to it. Absolutely. And you don't have to. And then on the semiconductor side, you can pick something like a SOX, SOXX, or the SMH. You can play the field a little bit bit if you don't. As you can see, Nvidia has been spinning its wheels all week as some of these other ones start to go. So I think
AMD
it's,
taking
yeah,
up some of the
AMD starting to
slack.
go. Yeah,
Because
AMD's been.
because Nvidia is basically overvalued and AMD is undervalued. And so they're going for the undervalued oversold plays. It's logical. Money flows and sector rotation in lieu of volatility. That's my mantra, right?
Yeah.
Okay, so small caps IWM. So let me just show you that one and we'll go from there. This is small caps on, I'm also going to show the 400 on a weekly. Let's focus on that. We did have this really nice kind of head and shoulders pattern. And I know you shorted that when I was very bearish the market and it went through my price target, by the way, initially when it got rejected at monthly, and it went right through that 199 and threw up down into the 400 week. And what do they say about 400 week? Unless you think it's bye-bye, we're going to get a bounce there. Across the board, 400 week bounces were amazing. Look at Micron. Too many to even talk about. Anyway, long story short, this 212.25 is key. This morning when we got CPI and it was showing a soft print, we actually spiked higher right into that purple line, which happens to be monthly resistance. It's interesting. Anyway, so this is last week we talked about above 209, which was this prior high, and this trend line, loving these trend lines, off of a 400. Okay, so if it comes back inside this, let's call it 210, then you know it's going to shimmy down that trend line. Otherwise, you have got to stay above 212.25 on a weekly close in order for this to move higher. And it does have support. Last week was a great bullish engulfing from a technical standpoint that it tagged pre-market on the CPA print when yields softened, equities spiked on a softer CPI, but it got rejected immediately. So that's your next level. It needs to get above 217.85 in a nutshell. Then it needs to go back up to 227 in a nutshell. Then it needs to get above how this works. All right, so that was small caps. Rich is also asking about your Google. By the way, they let off a whole bunch of people today in search. So you've got the right idea. I'll let you in a minute. Let me just go through Glenn's question. Given how much we have gone up with VIX and OPEX expiration next Wednesday and Friday, don't forget FOMC, could we see a bit of pullback or digestion post 620? Yeah, we talked about that. I'm still expecting end of month, June. Maybe we have another push into early July. Let's see what happens at 6,100, because above that, I think would be one of those fake breakout, fast failures type of moves. The most bullish chart that I see right now is Microsoft. I'm very focused on Microsoft. Of all the Mag 7 stocks, no stock is more bullish to me. If Microsoft right now, it's so bullish to me. If Microsoft starts to pick up speed and then roll over with gusto and tank, the market will follow. So right now, that's my one tell within the Mag 7 universe.
I just think Microsoft is in all the right places. The market finally realized that, as opposed to the Google that has some issues. Microsoft is really primed to really, in an ecosystem that people can't get rid of to begin with. Now they're going to infuse that with all this AI capability that's going to give them pricing power. You're not going to be able to leave. You're going to get everything you need right there. So fantastic stock.
Did you see that the comment? D. San says Microsoft prepping AI co-pilot for the Pentagon via the insider. To me, Microsoft is just the most bullish stock. So if follow that leader, it used to be Nvidia, now it's Microsoft. That's how I feel about it.
Yeah, it is. You're right. It's doing all the right things. With the Google, I'm not going to relent. I think they're in trouble. I think they have a lot of, they're not Kodak. They're not in any way like Kodak specifically, because Kodak had nothing else. And so they screwed it up majorly. Google has a lot of really good things going for it. So it's in scramble mode. It's trying to figure out how are we going to make this pivot from that's going to require us to almost cannibalize, almost like having to move into something where they don't really have that much of an advantage from something where they just dominate that industry. So I think eventually you're going to start seeing some numbers. So I don't know exactly when and how it plays out, but I'm still bearish on it. I'm going to remain bearish. I added some puts last week. I have a lot of good things going to the upside. I'm making tons of money to the upside. So it's not this isn't my one bet. Okay. So keep that in mind. This is just one piece of my portfolio, but I really do think we're going to drop at some point, because I think the headlines will be overwhelming. I think at some point they're going to say, oh, they dropped 3% of their market share, 4%, 5%. It may not happen as quickly as I think. Maybe I'm dreaming, because around the world, people are just going to still Google things, but I think you're going to see it happen. And I'm just wondering how they're going to navigate that environment from a story standpoint.
Thomas, he he's making a comment about thorium breed molten salt reactors, which could take over from U-235 reactors. And there's a lot of other very science-focused energy inputs here that you're talking about. This is such a Jeffrey focus. So he's very excited about sodium batteries and First Solar, for example. So that's definitely a conversation with Jeffrey. I have no ability to talk to that, but I'm going to put it in front of him and get his thoughts. Anyway, is there, and you're talking about, though, advanced stage efforts on the science of new energy sources, which China is also front and center in fusion and such. I don't know what will come first, or which will dominate, or how it's going to get deployed or invested. I have no idea if this capex that's already gone into the data centers and such is going to be in vain when these new sources come out either. So I can't predict that. Nope, cannot. But that's a really good point. There's a lot happening behind the scenes with new energy, which is another reason why I'm bearish oil. I think oil has a falling global oil demand, and that's all there's to say about it. I just see it everywhere, from the energy alternatives to the EV mandate in very large countries. It goes on and on. I'm still bearish oil price, big picture. All right, I didn't know about the Microsoft. That's new. It creates its own fuel. Okay, that's a Jeffrey thing. Okay, so
popping a little bit. Yeah, the Microsoft's up $3 on that news. Yeah,
and
I mean, it's amazing stuff. And so I've been looking at other things too. I think as a sort of indirect link, like a Goldman, I think that's starting to look interesting. I think if this AI thing happens, maybe you start to see IPOs, you start to see deals. And as the Goldman CEO said the other week, he said, we can accomplish a lot with AI now. I can get what used to take me 6 weeks, 8 people, I can do in like a day. And I'm pretty sure Goldman isn't going to say, I used to charge you 20 million for that IPO work. I'm going to, you know what, I'm saving all this money, so I'm going to do it for 5 million now. I'm pretty sure they're not going to say that. So I can see the potential for expanding margins in that area. Plus you've got this regulatory tailwind at some point, capital requirements, things like that can help their return on equity, things like that, balanced metric type stuff. But I think they're in the right place. I always like to bet on the smartest people in the room. I didn't say smartest guys in the room because it's guys and girls, but I think those are little extra ways that you can maybe play a couple of different themes, right? They're going to benefit from AI because of the deals, of the IPOs, and then you're going to also benefit from some of those actual Trump benefits that we're supposed to focus on at some point. When and if, yeah.
T is also just commenting on that title of Charlie McElligot's piece, which is up, then down, quote unquote, remains most likely path, and you and I. That's the thing though, right? So the market's all kind of getting excited about this melt up into meltdown. Yeah. At some point it gets front run. And then T is also mentioning, what about his birthday, right? If he doesn't get the crowds that he wants or what have you, taxpayer funded June 14th birthday parade. So yeah, he's not going to go into the weekend with the markets down.
Angry.
Very
angry.
Good point.
Did you say is it Trump's birthday? Are we talking
June
about
14th.
Trump?
We're talking about Trump.
Okay.
So T's comment is he is not going to go into the weekend with markets down. So yes,
He will not go gently into that good night. What else am I doing? I'm looking at I've shorted Upwork, and I'm like, finally, it's starting to keel over a little bit. That's the flip side of AI. I feel like some things are susceptible to some difficulties because of AI taking over. So I'm trying to look around, have my head on a swivel, trying to look around and figure out where this disruption is coming from. So I think it's a really fascinating thing that's happening, and trying to find those places where I can maybe play a little bit of downside as well, not just have endless upside. So
there are stocks that are really extended, and then they come in like Chewy with earnings and they dump, but they're really extended from the mean. So I actually have put together a whole list of some of these, and it doesn't mean that they're trend reversals. It just means that they're wicked extended, and now they digest and come back down for chase shorts. But as far as July, Archna is commenting, thank God I just saw this. I didn't know it. Last 10 Julys have been green in SPY. Outliers revert. And right now I'm seeing VIX come into this kind of July basing area. And typically we also have seasonality of higher VIX in September. I'm seeing it just pulled forward a little bit. Maybe it won't be, but for right now we don't have any except for intraday, like for a trade on the headlines of Middle East war vibes. And the same reason why that inverse head and shoulders that I posted for clients in oil looked so bullish, the market didn't know it yet that we would have war vibes. And that's exactly what happened. So, and if you're wondering what the heck I'm talking about, and then we'll go, yeah, any other last questions? And by the way, this is what I'm talking about because it just looked really bullish for a tactical trade. This is crude oil, still bearish gold, by the way. That's not falling apart, but it's tactically short, whereas I'm long-term trend long. Same thing. I am bearish, macro bearish oil since last year, but tactically long past few weeks because it looked so ripe for a reversal. And then we got the announcement today before market close of embassies and such in the Middle East, likely Iran.
Healthcare too, Samantha. We've seen with the extended nature of some of this growth, these growth areas, we're seeing maybe just a little bit of money move back into healthcare. NVO's had a good run, XLV, Healthcare Select, Spider. So maybe people are going to look for a little, I hate trading XLE, but like you, I like to do it tactically. It just breaks my heart every time when I get a big idea on it, but I think that's interesting to see if it
So
can.
XLE to me is not my pick, although it's working because oil's moving higher. VLO is my pick. So VLO from that 100 to 135, and now it's pushing into 140. It's not yet, it's only 134, but I think it's going to push into 140. So VLO is my pick. And as it relates to NVO, gorgeous because it was a 400-week bounce and it had already been a short from 138 to 65. So as long as it could get and stay above 70, it's moving. It's already above 76. Trail that, stop, pull it up. I can see it going all the way up to 86, and then it's going to hit its head hard. So long story short, there are tactical longs even after very solid extended downturns like AMD, like NVO, and they're getting bid up. And the same goes with small caps, but I am still your anti-Tom Lee. So with that, we wish everyone a great rest of the week and weekend, whether you celebrate Trump's birthday or not. And then we'll come back together next Wednesday. And then the following week, I'm on vacay before the 4th of July dead zone, but maybe not so dead as it relates to tariffs, because those are supposed to roll out soon after. So we'll be here for it, and we'll see if liquidity starts to show any signs of selling underneath the surface. Any last words?
No, that's it. Said, I didn't know you were on vacation, so I may do the same. Where are you going? I'll meet you there. Are you going to the cottage again? You're going to be floating around on a kayak?
France.
France. Oh, very nice.
Yeah, but and I actually get to meet client Tim and Powell with my daughter Emma, and actually Alexander's going to be in Paris with his family, so some folks are going to be traveling a bit. It's that time. We got to take a break. We worked so hard over the winter. Oh my goodness. So yes,
All right.
Everybody enjoy your summer. We'll see you next Wednesday. We're not going anywhere until after. Cheers.
Okay, thanks folks. Thanks Samantha. See you everybody.
Bye.
Subscribe to LaDuc Trading YouTube channel for more macro to micro options power hour and other content.